So, after this discussion about regulation, the next two talks will focus on the role of money in 2021 and how national banks are dealing with this topic. Philippe Bekhazi will give us an overview of how the old world of fiat money and the new world of digital assets will or will not work side by side in the upcoming future. So, dear Philippe, your turn. Welcome also to the CfC St. Moritz virtual day.
Having me. It's a pleasure to be here, albeit virtually. So today I'm going to be talking about the future of money in 2021, stablecoins, central bank digital currencies, and the likes. I also will be talking shortly about Bitcoin because we hear a lot about it. I have some slides. So Fred, would you please share the slides with the audience? So I'm going to start with this this slide right here, where I'm basically categorizing money in basically two ways: the sovereign-backed money that we know, that's the legacy systems and the money like dollars and euros, and then the central bank digital currencies, which are basically backed by this legacy system somewhat, but digitized. The money itself doesn't really change. It's just that it is digital. And then we have the stable coins that we hear a lot about, that are basically based on this money, but just privately sponsored and put on a blockchain for just to be exchanged more efficiently. When I say efficiently, I mean quickly and more cost effectively. On the other side, you have self-sovereign money, where I'm just putting Bitcoin here because we're going to be talking about digital aspects of money today, really. But there are other forms of self-sovereign that you've obviously heard about for a long time: gold, silver coins, and there's even like stable coins that's backed by crypto collateral. We're not going to be talking about those right now. We're going to be focusing on stable coin that are backed by a private sponsor, Bitcoin, and just generally banking and where we're going in 2021. So it all starts kind of in a way with this slide, which has accelerated in 2020 with this biological issue that we are all facing, COVID, and that has created significant strains on the economies. But that issue has just been accelerated. It is a trend that's been going on for a long time, in that fiat currencies over time, most of them, not saying all of them, but at least the dollar has lost value over a significant amount of time. And so that is an issue, because it is silently stealing money from people who have saved their money. So basically, Bitcoin has come along to try to sort of become some kind of a store of value, a way to have known scarcity, because there will only be 21 million Bitcoins, and effectively it is a sort of deflationary currency, because it doesn't. There will not be any more Bitcoin created, and therefore the price can somewhat only go up if the belief in Bitcoin is there, right? It is based on belief. It is not based on anything else, and that is usually a lot of the arguments behind why Bitcoin is not valuable. But it is valuable at 600 billion plus in market cap, $63 billion in Bitcoin volume. It trades a lot. You've seen it in the news. Lots of last year, a lot of institutional managers, investors, corporate buyers have invested in Bitcoin, and they have all come to the same conclusion, in that you can't print an unlimited amount of dollars without it having an effect on the value of that dollar. So a few Bitcoin use cases. Obviously it's a form of payment. It's divisible. It's quasi-instant. It's portable. It's a way of conducting digital peer-to-peer transaction. Secure. There's no third party. There's no bank. You can go from one person to another directly. It's a store of value. It's censorship resistant. Has known scarcity. 21 billion Bitcoin at the outset. And it's used right now a lot in speculation. It's digital collateral. It's good collateral, at least for those that know how to use it. And so with that said, I don't want to go too much into Bitcoin. I wanted to put that aside and sort of clarify that, because it's important because we hear about it a lot in the current news. But what we're going to be mostly talking about is where is banking going, stable coins, and central bank digital currencies, which are kind of all connected. Basically, traditional banks, they're focused on automation. They're based on a lot of multiple platforms. No, if most of you, some of you may have worked at banks. There's a lot of systems upon systems upon systems upon processes upon processes, a very heavy overhead of regulatory and of technology. And this has created issues for consumers and for themselves, because there's a lack of clarity on a lot of things. They have a hard time sometimes managing their business efficiently. So online banks have come along, more fully integrated platform. There's more customization and personalization, a better UX, a better UI, a better experience for users, and they've started adopting new revenue models. And then there's fintech, which is basically what what stable coins and digital payment, digital currencies are coming under, right? And this is basically sort of what I'm really interested in, is everything that has to do with new methods of payments, new methods of storing value, so we're going to be looking at specifically stable coins, because we've been talking a lot about stable coins, and stable coins have basically surpassed $30 billion in market capitalization just in a very short amount of time. Actually, from Jan 2020 to Jan 2021, we had a 500% year-on-year increase on stablecoin. That's pretty remarkable. And stable coins are led by basically say 2 or 3 sponsored led stable coins. Tether is the first one with a market capitalization of $24 billion. It is largely the number one. The second one is USD coins backed by Circle and Coinbase at 4.8 billion. Or more or less, and it's growing every day. So these might not be completely up-to-date numbers, but they are very close to being up to date. So Tether represents more than 80% of the entire stablecoin market. Why is that? Well, it was a first mover. It started early. It's a very simple concept. It basically is tokenizing a dollar and putting it on a blockchain. It was initially put on Omni, which is backed by Bitcoin. Now it's running on multiple blockchains that are more or less, more efficient than the Bitcoin blockchain for that purpose, right? And that's really important to specify. So it enjoys large network effects, it has more of an international focus, and therefore it's very much adopted, because a lot of exchanges have adopted it first, and it's very sticky. There are other stable coins that are decentralized based, DeFi. DAI and SUSD are nearly $500 million together. It's quite interesting. It's growing quite a lot. The collateral isn't dollars in the bank account. In this case, it's all algorithmic crypto collateral instead. But again, I don't want to talk too much about the technology behind it. I want to just talk about just globally, generally, what the trends are, especially in those stable coin that are sponsored, privately sponsored. So Tether remains largely used, the number one used crypto actually out there. It's even there's more turnover in Tether than in even Bitcoin or Ethereum even combined. If you look at those numbers, it's $104 billion of daily volume. That is just mind blowing. So again, supply has surpassed 25 billion, transaction volumes grown to $1 trillion, number of addresses have grown to 856,000. All of these metrics are pointing up. It is quite incredible. In 2019, I was thinking about stablecoins. I thought it was probably going to be something successful. I had no idea it would be that successful in such a short amount of time. It's really incredible. So what does stablecoins actually do? Well, they're kind of a volatility solver. Back in the bear market, they've been a solution to high volatility in prices of cryptocurrencies. So it was a sort of way to go back into something that was stable but without leaving the digital ecosystem. You remained in sort of crypto, but without having to go back into your bank account to fiat. It's a financial bridge because you can basically go from one. You can go from your bank account to a stablecoin without taking any risk in between. It just sort of digitizes the dollar that is in the bank account into a wallet that you can control in sort of a bearer asset way. It's a solution, potentially a solution for the unbanked. There's a lot of conversations about that. This is something that potentially, because of increases in efficiencies, increases in the way that it becomes very cheap to hold money, then it becomes maybe a way that will benefit millions of people, all around the world. And then, of course, for traders, it's an arbitrage opportunity. There's a lot that can be that stablecoins bring to the ecosystem, and it's very important to bring them all together because it's all intertwined and it's all very woven in a way that creates value for everything. So every part plays a role, and it's so there's Bitcoin, there's stablecoins, there's exchanges. All this ecosystem plays an important role. I'm going to have to hurry up because I'm running out of time. There's such a big, but basically you'll look at the multiple benefits of stablecoins. We're going to run through and talk about the stablecoins versus central bank digital currencies, because basically the difference is that a central bank digital coin is a digital representation of fiat money issued by a central bank. It's centralized, it's regulated. There's payment efficiency because it's centralized. And you have somehow private transactions because, well, it replicates a little bit like the money that you would expect from how a bank would hide transactions. Stable coins, full data privacy is possible, but right now it is on a blockchain that's public. It's a bearer asset. It's issued by private banks, so it's very different. But it's at the same time, they can be confused. They are two different things. A lot of countries are looking at creating CBDCs. There are no CBDCs today in production. Couple of highlights. Obviously, there's going to be Libra. There's Visa's support of USDC. The Stable Act is coming and expected to regulate stable coins, at least in the US. Probably will have a larger impact overall. China has been leading on CBDCs, and there's expectation they'll roll out their cryptocurrency. Overall, stable coin transactions, CBDCs are on the rise. They're growing. The big question is, how do you transition to a decentralized world without breaking existing economic and regulatory processes? And that's the big question. That's the question that sort of makes me, get up in the morning and try to solve, right? So that's basically it in a nutshell. There's so much material in this. It's so exciting, but unfortunately, only have 15 minutes for this. And but there is a Q&A, and so I'm happy to answer questions, Nicolo.
Super. Thank you very much, Philippe, for this introduction to that, as you said, really also vast and complex topic. So I would also go into the questions that we received, just that I can also bring that up. So do you see stablecoins taking a backseat to Bitcoin, Ethereum, or other altcoins in this current bull run?
Stable coins are taking a back seat in this current bull run. Well, they're risk on. Stable coins are, in a way, kind of a risk off medium of exchange. They're not really an asset. I mean, you're basically taking dollar risk when you hold a dollar stable coin, dollar stable coin, or a euro stable coin, or Swiss stable coin. So I would say that right now, Bitcoin, Ethereum, and largely all of the other crypto assets and currencies are growing quite significantly. Especially DeFi has been very much on a bull run.
So the next question would be, what do you see being the biggest risk for mass stablecoin adoption?
The biggest risk for mass stablecoin adoption.
Correct, yes.
You know, we talk about it repeatedly. I mean, regulation and lack of transparency can impede the growth of stablecoin. I think generally people need to understand why they need a stablecoin. I think that's the first step. And then, of course, we don't want to find out 6 months down the line that stablecoins are going to be outlawed or create or have so much friction embedded in acquiring them that they become completely basically useless, right? So those are, I think, the two main things that I would highlight.
Okay. So I would just add the last question. So what are your thoughts regarding the accusations that Tether is a fraud and the ongoing investigation into Tether by the Office of the Attorney General of the Southern District of New York? So it was a question that just came in now. So I think, yeah, well.
It's a lot of questions.
Should I repeat it?
No. Look, I've actually been asked this question so many times. I unfortunately can't really, there are things going on. I personally do not believe that there's anything really wrong going on there. I believe, the money is there, it's backed. I mean, they would not be operating right now if there was significant issues. So I would just leave it at, look, it's has grown significantly. It is $24 billion in assets. So, which means that a lot of people still do believe in Tether. They do believe in Tether, and look, it has significant network effects. And I don't have the details on whatever is going on. It might be more disclosure driven in terms of what is wrong with Tether. But right now, I don't have any particular issues with Tether. I don't believe it is. I don't believe it is a scam. It would be an amazing, elaborate scam if it were. So, while anything is possible in this space, I will say that I do not believe that. Okay.
Okay, perfect. Good, Philippe. So, first of all, thank you very much again for that discussion, for the presentation. Of course, also there are some more questions in here. You will also be in the